This is a strategy I used to make 13K in only 15 days. If you're new to the channel, make sure to like and subscribe. And let me tell you guys what this YouTube video today is about. If you guys don't know who I am, I'm a 20-year-old day trader who's been trading for a very long time now. I've lost way over 21 grand US dollars. And I can swear by that. I don't want you guys to go through the same struggles that I went through. So this is why I'm creating that YouTube channel, to shorten the learning curve. Many of you guys have messaged me privately saying you guys want tutorials, free lessons, all of that. So here you are. Today will be the first lesson of my strategy. The strategy I use is supply and demand with liquidity and break of structure. The good thing about this strategy is that you can tailor it to your own needs. If you're someone that doesn't have much time, you can swing trade it, so you can do it in the 1 hour, 4 hour daily time frame. If you're someone that has time on their hands, you can scalp it in the 1 minute, 5 minute, 15 minute. I am a scalper, but I do have many students and friends that are swing traders. Another good thing about this strategy is that you can use it for any pair, either futures with NASDAQ, gold, Forex, even investments. I use it for my investments a lot. Another thing that this strategy is good with is once you get experience, you can tailor it to your own needs. You can add your own skill set, spice to it. You can combine strategies together, like what I did, liquidity and supply and demand. You can do candlestick patterns or EMA rejections even. So that's something to keep in mind. I apologize if you have struggles understanding me. I had surgery 24, 25 hours ago, and I am a little bit swollen. With that being said, let's get to the video and let's get to the first lesson. Even just a day after surgery, I couldn't wait to make this tutorial. I'm so excited and eager to help you guys learn quickly. So if you haven't already, make sure to like and subscribe. I would really appreciate it. Okay, so let's see the video. As mentioned earlier, the strategy I use is supply and demand. A supply is the last bullish candle or upward movement before it goes down. A demand is the last bearish candle, which is my pink, before an upward movement. So if we're going to dive deeper, the last bullish candle before a downward movement. So this is the supply. The last upward candle before a downward movement. So the last bullish candle before a downward movement. We wait for it to tap our zone and we enter. You can either enter as soon as it leaves the box, and you can put your stop loss to the bottom, and then you can just hold. As you can see, this had a lot of momentum. This would just go down. This is more than 20x. As you can see, the number 20, this is more than 20x. And it just went down, 36x. You can either put your entry as soon as it exits the box, or depending on the next candle, how it does, totally up to you. But this is a supply. Supply is when you're shorting the market, you make money when it goes down. If you haven't already, I posted this trade here. It was called 2K in 2 minutes. I'm pretty sure I took this trade. Okay. We also have all these examples here. So like I said, you can even go in the 5 minute. So in the past, I used to trade the 5 minute in August, but I realized that it was more difficult to find setups. So I transferred over to the 1 minute. And I actually like the 1 minute more. It's more fast paced. With that being said, a demand, the last bearish candle before an uptrend, comes back to our zone. Here, it doesn't touch our zone. It just barely touches our zone. So this doesn't count yet. This one does. Once again, you can put your entry at the top of the box. You can put it to the end of the box, and you can let it go. Once again, it goes 5x, 6x, maybe even 7x. Now, when does a demand or a supply become invalidated? If price breaks below your zone. So when it comes down, if price were to come down to here and then go up, this is invalidated. It should not break your box. It should not top the end of your box. Even here, we have a demand. As you can see, last bearish candle before upward movement. Put your box here, or you can put it here. Put your entry either to the top of the box or on the candle, totally up to you, however you decide. And you could have held both of these. You could have gone again if you wanted to, or you could have just kept holding until you're satisfied. 1 to 1, 1 to 2. Like I said, with this strategy, you can design it, tailor it to however you like. I hold my trades 1 to 2, but recently what I do is I put my stop loss to my 1 to 2 target and I let it ride. So if it comes back down to my target price, I'll get out. But if it goes up, then, Hail Mary. Let's go to these ones here. This is also another one. We have last bearish candle before upward movement, taps our zone, and goes up. So also another win. You can move your stop loss to the bottom of the candle or to the lowest point that the price has entered. Totally up to you. You have to backtest and see what works best for you. The way I do it, I put it to the lowest point that it enters my zone. And once again, this goes like 5.8x. Now we have another example of a supply on the 5M. Once again, we're on the 5-minute chart. This is a supply. Last bullish candle before downtrend. Taps our zone. If you wanted to, you could have entered. As soon as it exits out, put your stop loss to the end of your zone. So in this example, since we want it to go down, we put our stop loss to the top. And in this example, we want price to go up, so we'll put our stop loss to the bottom of the zone. So that's also something to keep in mind. It's vice versa. Exact same rules, exact same strategy, just flipped. And as you can see, price wicks it once, twice, and just melts. You can hold however long. You could have held throughout the day. If you wanted to, you could have gone in the 1 hour. And then you could have decided when to get out. Okay. Another example in the 5-minute. This one was perfect. It barely wicks our zone and it goes up. You can you could have held this for so long. This is generational money. If you were to have caught this, this is 22x. So once again, you can make a lot of money, but that's if you are able to hold during all this action, going up and going down. So yeah, even if you're like a swing trader, you could probably enter on the 5-minute and just hold. Totally up to you. Like I said, another setup here. Demand, last bearish candle before uptrend, comes back to your zone. Let's say you entered here. We wait for it to go up. We'll probably take it here. As soon as we exit out the zone. Like I said, you can see how you decide to put your strategy. This is valid still. It doesn't break your zone. You can hold this to this high. And it hits. Okay. Now, if we were to go in the 1-minute, which is the one I trade on. This was another setup I took. Pretty sure it's on my YouTube as well. This was like a 1.6K day. I put my stop loss to the lowest point in the zone. And I held. You could have held 4.5x return. But I think I got out around here, which was around 2.2x return. Still a good return. And yeah, as you can see, it gives you the profits you need, the success you need. And you can also look at it in the daily time frame. I haven't even looked at the daily, but I can see we have a demand right here. Barely wicked you out. So this would be an invalid zone. Why? Because this pink candle broke just below it. Invalid. So given instance, you took this setup here, last bullish candle before a downtrend. You take the supply. And you wait for it to tap our zone. It tapped our zone. So we would not get in this trade. Why is that? It's because it broke our zone. So if it breaks our zone, it's invalid. So you would have saved yourself from a loss here. Because clearly it went back up. Last bearish candle before uptrend over here. Touches our zone. We wait for it to break above. Okay, we're in. So now we can put our stop loss to the bottom of the zone or to the lowest point that price has entered. Totally up to you. And depending on what you hold to, it would hit. And yeah, so this is a 4-1. I hold a 2-1. I would have gone out here, but given instance we took this trade still, would have lost. So make sure you have a good take profit price. I always hold my trades 2-1, and I let a runner if I like the way price is moving. Another example of a valid demand. Last bullish candle before uptrend. Price taps here, it goes up. And this, you can just keep finding these every session if you like. I have a rule where I take 1 or 2 a day maximum. And so another invalid setup would be this one, the demand. So it would be from here to here. This one, it breaks through your zone. If you see closely, it breaks through your zone right here. So you are saving yourself from another loss. There you go. Now I can do it again. This one here. We have another demand. Last bullish candle before our uptrend. Taps your zone. And it breaks through your zone. Invalid once again. So yeah, I hope that is a good place to start off with. I hope you guys understand the video. That's it for the video. I'll be posting more videos soon, more in depth and more, tools to use in your arsenal when using supply and demand. Stay tuned for those. So make sure you like and subscribe, and I'll see you in the next video. Peace out.